Interesting, when you were looking at the Turkey issue, you say it's really not going to be a systemic issue, that there's no reason everyone should be freaking out, for lack of a better phrase.
Yes, good morning, Julie. I just think it's a little bit too early to say that there's a contagion from Turkey. It's absolutely a big issue, just like there's been other big issues. We had Brexit, for example, that caused quite a lot of concern right around the world about what was going to happen with the EU and with the euro. We had North Korea. Now we have Turkey. But a lot of their issues are self-inflicted. A lot of them are unique. And what it's doing is potentially creating some opportunities elsewhere because of the noise that it's making right now in the global headlines.
At the same time, we also got some Chinese economic data overnight that fell short of estimates. How much of an issue is slowing China growth going to be?
Well, slowing China growth is obviously something that we want to watch, but it's slowing from a very high level, and it's still quite good. So what we're trying to do is separate the signals from the noise, and there's a lot of noise that's out there. And what we look for is something that's trending well and doing well, and China, I think, is still doing fairly well. We're still constructive over there, and then a lot of the countries that do a lot of trade with China are continuing to benefit from that growth. So we're not too concerned right now. Obviously, we want to keep monitoring the situation, but at this point, it's just a lot of noise.
On that subject of slowing economies, Terry, you've got this economic dashboard which you liken to the four horsemen of the apocalypse when it comes to looking at the U.S. economy and gauging whether or not we're approaching a recession. What do the four horsemen tell us right now?
Yeah, thanks, Mark. I mean, obviously, there's a lot of stuff that's going on in the world, and so we concentrate on where we can make money and not lose money. And so when we look at the United States, there's a lot of concern as to whether there's a recession on the horizon, whether we've hit peak earnings growth, and there's a lot of economic data. I've collapsed it down into four factors that we look at on our dashboard that, again, I call the four horsemen of the apocalypse. Is it the end of the U.S. economy? And those four factors, none of them are flashing red yet. And so we're still quite constructive, quite comfortable with what's going on in the U.S. and looking to make investments and put money in those areas which are unaffected by some of these other things going on in the world.
And what sort of areas are we talking about here?
Well, again, so the U.S. economy is doing quite fine based on these, the four horsemen aren't on the horizon. That's leading economic indicators, housing starts, consumer confidence, and the yield curve. All of those look positive. So what is unaffected by global news but constructive in the U.S., I would point to high-yield municipal bonds are doing just fine. High-yield corporate bonds are doing fine. Small cap U.S. stocks. All of these are areas that are completely unaffected by currency, by headlines of what's going on with trade. And so you can put money there, particularly on days when they get hit, and still be comfortable that they're going to work out and make you money.
And when you're looking at these four horsemen, so to speak, the one that is starting to waver a little bit is housing starts, and not just housing starts, but some of the other economic data. Is there one of these horsemen that you give more weight to, or do you really need to see them all rolling over? Are you concerned at all about some of the more recent weakness in housing numbers?
Right, as you point out, so housing start numbers that came out last month were a little bit weaker than expected. That's the first time that's happened. If you look at the bigger picture on housing, you have household formation that is much stronger than housing starts have been. So there's plenty of housing formation, therefore plenty of demand, and not enough housing starts. So that might just be a little bit of a blip. The most important one I think that you need to pay attention to is that yield curve. If it inverts in front, it inverts in front of every recession that we've had for the past 50 years. And that, there's no way we're going to ignore that. So we look at the 10-year versus the 2-year. It's still positive, but it's been flattening. So we're about 30 basis points between the 10-year and the 2-year. That's not inverted. It's still positive. That is probably the most important factor that we're looking at. But again, it's still in positive territory. So we're not running for the hills.